Hey, Eric here from 5minuteinvesting.com. And today, we're going to talk about the most important thing when you invest in a near bankrupt company. So before we dive into this topic, be sure to check out the comment section below. There's usually a bunch of free stuff I post below. So if this is your first time here, click subscribe and like this video as well. So what is the number one thing you need to pay attention to when investing in a bankrupt company? Now, this brings back some good old memory because when I first started investing, one of my first investment was a company that was struggling. It didn't have cash, and I bought it. I took it based on my friend's recommendation. I didn't do my own research, all the rookie mistakes you can possibly make. And within 1 week, the company went bankrupt. And the main reason was because they ran out of cash. So if you guessed the number one thing is cash, you're right. When a company is near bankruptcy, chances are it has a lot of debt. And a company go bankrupt when they can't repay the debt anymore. And that's because of a lack of cash. So if you are investing in a near bankrupt company, make sure to check their cash and make sure that's enough cash to pay off the next 12 months of interest. And chances are, if the company is in distress, it wouldn't have enough cash to pay off the next 12 months, and you should avoid. Now, of course, I know some very famous investors, they focus on buying near bankrupt companies because in the event the company actually goes bankrupt, whatever assets they sell off and cleared will be worth more than the share price they paid on the day. But that process usually takes a long time and it's a lot of risk. So you can't trade options with a near bankrupt company. I mean, you can, but it's a lot of risk. So after that investment, one of my personal rules is to avoid investing in companies that are near bankruptcy. Instead, I focus on investing in companies that are growing. So I look at the last 5 years of revenue and make sure they're growing. And I do my fundamental analysis and understand their strategy to make sure the company itself is growing. For example, this can be Amazon, Apple, Google, Square, if you are into electronic payments. So these are all growing companies. And instead, I invest and focus my energy on those. So let me know if you have any questions. And if you leave a comment below, every day we announce one winner for our technical analysis course. So yeah, stay tuned for the next video.